the green economy is paving the way for silver's use in industrial uses. And quite frankly, you're looking at upwards of 55% of silver demand going to industrial demand. And PV photovoltaics is really showing us the way forward in that respect. Not to mention the electrification of everything.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities, and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by Abaxx Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, battery materials, and precious metals markets. Smarter markets are here.
Welcome to Smarter Markets Encore, Ideas Worth Repeating on Smarter Markets. I'm Dave Greely, Chief Economist at Abaxx Technologies. Today we are bringing back an episode that we brought you last May with guest Michael DiRienzo, President and CEO at the Silver Institute. We discuss the outlook for silver, its role in the energy transition, and the role it can and should play in investors' portfolios and in our financial system in the 21st century. Those topics are as relevant now as they were last year. One update: last year we discussed that at the time, silver appeared undervalued as it took 100 ounces of silver to buy 1 ounce of gold. Of course, silver prices have climbed over the past year. Now it only takes roughly 60 ounces of silver to buy 1 ounce of gold in the physically deliverable gold and silver futures markets, now trading on Abaxx Exchange in Singapore. Hello, Michael. Welcome to Smarter Markets.
Thank you so much. I am excited to be here with you all today. I've heard a lot about this podcast, and it's an exciting time to be in the precious metals industry. Thank you.
We're excited to have you here, and it is an exciting time. And really appreciate you coming here to talk with us about what's happening in the silver market. Often, gold will capture people's attention, and then they'll begin to think about silver. And at the Silver Institute, you think about silver, I would imagine, just about all the time. So if you were to kind of want to clue people in who are just beginning to think about silver, what are some of the things they should know?
First of all, thank you again. And let me tell you a little bit about the Silver Institute. It's kind of like the World Gold Council, but at a much smaller scale monetarily and employee-wise and so forth. But we too, like them, promote one metal, and that's silver. And we do it through a variety of means. So last month, we put out our World Silver Survey 2025, which is a look back at the market in 2024. Also has some forward thinking into the thoughts that our consultants at Metals Focus have for 2025. We do that report. We do market trend reports throughout the year, and they can be on various aspects of the silver market. We put out a bi-monthly silver news. We have on-the-ground programs in Mexico, Peru, India, and China. And we do a lot of speaking at conferences. So we just returned from the India Silver Conference. Next month, we'll be speaking, or I should say, I'll be speaking at the Asia Pacific Precious Metals Conference. And later in the year, we'll be speaking at the China International Silver Conference. And we'll also attend the LBMA's Precious Metals Conference. So we want a lot of visibility for silver. We try to spread the word of silver and all its many facets to a wide-ranging audience. And that's what we do. Our members are leading primary and secondary silver producers, refiners, those that use silver at the end of the day or sell silver at the end of the day. And when you widen that scope to our sponsors of the World Silver Survey, you add in various commodity banks that trade in silver as well. So we've been around since 1971, so we're over 50 years old, and the mandate continues marching on.
And I'm curious, with your recent trip to India, what was the conversation at the conference?
Well, the conversation was really about silver and its reaction to gold. And, quite frankly, silver has not performed to date with respect to the increase in the gold price. Right? I did a CNBC interview while I was in Delhi with the local CNBC station in India. And I guess my point was really twofold. One is that we're going into the fifth year of a supply deficit, meaning that the structural deficit will continue. It might be a little smaller this year than in years past because we expect more mine production. But when you look at a ratio of gold to silver, the gold silver ratio, you're looking at 100 ounces of silver to buy 1 ounce of gold. All right. And that just screams one thing, that it's a prime opportunity to buy silver. And that was really the general theme throughout the conference. Other things we chatted about in India was how can the Silver Institute help the Indian market? Now, India has been quite strong on many fronts in recent years. It's a big industrial demand center. They have the world's fourth largest silver mining company. They obviously are very, very important to the jewelry and silverware industry. So India is a key player. I mean, you look at China, India, and the United States, and they're very, very important.
And I wanted to ask you a bit, because in some of the publications that the Silver Institute publishes that you referred to earlier, I think one of the really interesting things about silver is it's always had fairly prominent industrial uses as well as store of value. And these uses change over time. There was a time when photography was on film and a large source of demand for silver was from photography. Now, the Silver Institute's written quite a bit on how the energy transition is driving new uses and demand for silver. And I was curious, what role do you see silver playing in the energy transition, and how is that driving some new forms of demand?
The green economy and artificial intelligence are really going to pave the way for silver on the industrial side as we move forward. Photovoltaic use of silver wasn't even really on the map in 2012, 2013. It was very, very small. And look where it is today. And as you mentioned about photography, 20 years ago, photography was the number one use of silver in the industrial arena. And now it's a relatively small component. I mean, it's still around, but it's just really small. We all have digital cameras on our phones. It's more of a hobbyist issue now. And there are some developing countries that still use silver halide photography with respect to X-rays and other uses. The green economy is paving the way for silver's use in industrial uses. And quite frankly, you're looking at upwards of 55% of silver demand going to industrial demand. And photovoltaics is really, really showing us the way forward in that respect. Not to mention the electrification of everything, right? With respect to automobiles, the electrical grids, infrastructure, and so forth. If it has an on and off switch, you could be about 99% certain that there's silver in that component. So everything from our TVs to our computers to our iPhones, iPads, whatever it is, there's silver in that component.
And what makes silver so useful? I mean, I imagine it's a very good conductor, but an expensive one.
It's a number one conductor of electricity. I mean, copper is a close second, but silver is number one. So when people start talking about thrifting out of silver to go to copper, they're often flummoxed at the end of the day because you're going to need silver. There are certain components of the industrial market where thrifting is ongoing, and it's certainly happening in PV. But the number of installations across the globe that are increasing year in by year out will increase silver's use as well.
And with photovoltaics, China's had such a dominant position in solar panel production and installation in recent years. Are you seeing different patterns of regional demand for silver emerging?
Yeah, we are. And, leaving the United States out of it for a moment, I mean, it's really picking up steam in Europe, all right, where the incentives to install in your home solar panel installations continue. The incentives with the new administration here in the United States will probably come to an end at the federal level, but that doesn't mean they're going to end at the state and local level of government. So Europe is a close second to China. Japan as well is a key player in this industry. Australia is an up-and-comer with respect to solar panel installations. Look, at green energy is green energy, and there may be some people who fight tooth and nail against green energy. And I don't know why, but they do. If they're either pro-coal or pro-gas or whatever, the fact of the matter remains is that this is a trend that's not going to reverse. We're not going back to coal-fired power plants as our number one dominant source of energy. Clean energy is here to stay. The percentage with respect to the sales of electric vehicles or hybrid vehicles globally is on the rise. The incentives are still there provided by the auto manufacturers to buy a clean energy vehicle. And you look in Europe, you look in the United States and everywhere else, this is a trend that's not going to stop.
So we've got strong demand coming from photovoltaics, that sort of industrial use, strong demand China, Europe, Japan, coming Australia as well. Where's the supply coming from? You mentioned India has one of the fourth largest producers, but where does silver come from these days?
On the silver supply side, you're looking at countries like Mexico, which is still the leading silver mining country. And that's followed by China, and then Peru, Bolivia, and Chile. There were certain operations in regions in the last few years that were impacted by some geopolitical issues, strikes, and so forth. But some of those mines are coming back on stream, especially in Mexico. China does not have one huge silver deposit, nor do they have a huge gold deposit. They have a lot of deposits there, a lot of mines, which when they're all taken in totality, China's the number one gold producer in the world now. Most people think offhand, if you were to ask them on the street, they'd say South Africa, but it's really China. They're the number two silver producer in the world now. They've eclipsed Peru a few years ago. But those are the leading countries, and the United States is top 10 as well. There are some really significant projects in the United States and some leading silver mining companies, which I'm proud to say are members of the Silver Institute, which are continuing to improve their operations and mine more silver in the United States.
Yeah, I do think most people will be surprised to hear that China was a leading producer of both gold and silver. I'm curious, you had mentioned some of the geopolitical issues in the past creating problems on the production side. How are the recent geopolitical issues, the US tariffs, the potential for US tariffs, how are they affecting the silver market?
Well, when President Trump was elected in November of last year, he had said, quite frankly, that he wanted to impose a 25% tariff on every product coming from Canada and Mexico. And what you saw was in both the gold and silver industries, a rush to transport gold and silver from Asia, from London to New York in advance of April 2nd. You know, we're happy to say that bullion was carved out of that, I don't want to say agreement, but his proclamation. And the 25% tariffs is not going to affect from Mexico and Canada doré that's being sent to the United States for refining, because they fall under the existing trade agreements between all three countries. So, but there is a potential down the road where these tariffs could quite possibly impact the industrial side. And it's something that we're very mindful of. I mean, as goes China, there goes global GDP, right? And if these tariffs if they remain in place, and we have every reason to believe they will, until these certain trade agreements are reached between individual countries and the current administration here in the United States, we're going to see some questions arise with respect to demand for silver on the industrial side. We don't think it'll be too impactful. As a matter of fact, I think it's less than 0.05%. that we're calling for in a reduction of total industrial demand. We've set 4 years of records with respect to global industrial demand. There may be a small decrease this year, but nonetheless, it's still going to be very strong, especially when you compare it to 10, 8, 9 years ago.
And for a U.S. consumer, if you were to see an impact from the tariffs on silver potentially in the future, what sort of products would those impact for a U.S. consumer?
You would see that in products that are made in China. There's a lot of electronic components. You would see your Apple phones, iPads, and so forth. There may be a small increase, but it's not going to be silver related. It's just going to be tariff related. So I don't think President Trump is single-handedly going after silver. We know that's not the case, but we think that consumer demand could be impacted. Another area where it could be impacted is in automotives, right? A lot of the parts that are used in U.S. manufacturing of automobiles come from places like Mexico and Canada and China. So there could be a small impact there. The question is who pays the price, because someone's going to have to. Is it the consumer? Is it the individual country? Or is it the company?
And you had mentioned earlier that 100 ounces of silver to buy an ounce of gold right now. How do you tend to see rising gold prices affecting the price of silver?
We're about to put out a report on the jewelry side. Okay. Now, we surveyed hundreds of retail US based jewelry manufacturers. And in some cases, the consumer is being priced out of the gold market. So we think it's going to be great for silver at the end of the day. And the beautiful artisanry and design of some of these silver pieces are quite fantastic. So we think there's going to be an increase in, at least from the US side, of silver jewelry demand. And that's just based on the price of gold today. Okay. And a lot of the gold that's being sold today is not being bought by an individual. It could be through an ETF, GLD, or the Spider Gold product. But the fact of the matter is, a lot of it is being bought by central banks. They are acquiring a lot of gold, and central banks don't hold silver. So silver is not swept up into that phenomenon.
Is there any reason why central banks have never held silver?
They did it at a time. I mean, you have to go back to like the 1950s, 1960s. First of all, it's hard to store. It is a store of value. A lot of people look at silver as the number one store of value because it's affordable, and it too reacts, I should say, in times of economic and political uncertainty. Central banks in the last few decades have not purchased silver. I can't think of any right now offhand that have a silver position in their central bank portfolio. There may be some smaller ones. We heard last year that Russia was going to start acquiring silver. We've seen no evidence of that come into light.
On this podcast, we like to talk about market infrastructure, where there may be problems or market infrastructure may be lacking and how we can improve it. And I think there's a better understanding of that in the gold market than in the silver market. For example, many people understand that gold trades spot in London and futures in New York. I was wondering if you could walk us through, like, how is the silver market structured globally?
It's the same way. All right. There's a lot of people out there that say that there are people and banks that are shorting the silver market to keep the silver price low. We don't necessarily believe that. We just think that silver is silver and gold is gold. And quite frankly, they trade the same way. There's an LBMA gold and silver market price every morning that's used by the banks. It's not so much used by the end consumer or potential purchaser of those products, but it's a trading value to start the day. Taking the United States, for example, there's a market price that is set, but is it set for real? No, because these markets trade 24/7, right? So when our markets close later this afternoon, we have to wait only a few hours until Asia opens. And then that price will continue to increase or decrease. But, if you look at today's action in the market, I mean, silver on a percentage basis is doing better than gold. Gold, I don't know the percentage of increase it has this year, but silver's up about 12 or 13%. It was up 21% in 2024. So it's hard to make an argument that the silver price is not going to go somewhere north because we think it is.
And, you said the structure is very similar to the gold market. In the recent period, the last couple of years between COVID, potential for US tariffs, there had been some pronounced dislocations between the futures market in New York and the spot market in London. Has the silver market experienced similar challenges or price dislocations?
Yeah, we did this year on what's known as exchange for physical EFPs. It impacted gold to a really big extent. I mean, you look at February and March before the April 2nd pronouncement, and it also affected silver. And quite frankly, there was a dislocation. But the market bore that, and we are where we are today. And quite frankly, the EFPs basically ended on April 3rd. The shipments stopped coming in from Asia and more importantly from London. And there are still ships out there that have gold and silver on them that are waiting to enter New York. So that has been mitigated. And there are people who look at the New York price, the London price, the futures price, and they'll make those decisions based on whether it's allocated or disallocated or whatever. But quite frankly, what's missing from the silver market today is strong, robust institutional investment.
And what would that add to the silver market if it were to come in?
Well, it's coming in. It's starting to trickle in. And in our World Silver Survey 2025, you see an increase in institutional investment. We're working on platforms and programs to educate institutions and institutional investors holding silver. And we just began that this year. We've been doing it all along, but this is an active program that we started this year. And quite frankly, there are institutions that are doing that. I mean, if you take the United States, for example, I don't know the number of states, but it's above 20 that have enacted laws at the statewide level to rid taxes on gold and silver purchases. Okay. Because they were taxed. And if you look at the United States tax code, on one hand, they recognize that silver and gold are investment products with respect to them being allowed into retirement funds, IRAs. But on the other hand, they look at silver and gold as a collectible when it comes time for the capital gains tax. And it just makes absolutely zero sense, right? I mean, a gold bar is not a collectible. A silver bar is not a collectible. An American Eagle coin or a Canadian maple leaf, they're not collectibles. Okay. Those are investment products. And there are anomalies across the globe. There's a VAT tax in certain countries in Europe on silver, but there's not a VAT tax on gold. So it's an impediment, but we started to see countries like India that have lowered their rates on the importation of silver and have lowered their rates on the taxes for Indian consumers who purchase silver. And we're hopeful that trend continues. I know that Thailand, for example, is facing a similar situation. The Thailand jewelry industry relies on, I'd say, 100% of importation. I don't think they mine silver in Thailand. So a potential tax on silver could impact that particular jewelry market.
So that's interesting. So kind of more equitable tax treatment of silver being held as a store of value would be a big improvement. Are there other improvements in either the market infrastructure or applications of financial technology that you would like to see to improve the silver market?
Yeah, I mean, since 2006, the silver market we've had ETP products, right? We started off with Barclays ETP here and went off like gangbusters in 2006. In 2004, through State Street, the gold product came online, and 2 years later, the silver product came online. I mean, this is just a way of democratizing investment in these precious metals and especially silver. It makes it easy to get in and out of a position from your desktop or even your iPhone. These things are being innovated as we speak throughout the world. And if you just take India, for example, 2 years into their exchange traded products, 2 or 3 years, it is a real convenient way for Indians to invest into silver. Historically, Indians wear their gold and silver on their bodies as a sign of wealth. And now they're getting into the electronic trading of silver. And we think that is a trend that's going to continue for quite some time.
And when you look at that sort of more monetary use of silver, you've mentioned Asia a couple times as a leading area. Is it much more advanced, the use of silver for store of wealth, for holding the physical? Does that tend to happen more in Asia than, say, other parts of the world?
I think so. Yeah. I mean, I don't see it here in the United States and we don't see it in Europe so much, but if you walk down the streets in Mumbai or Delhi, women are wearing their gold cups and silver jewelry, and it's quite prominent. I don't think you're going to see that trend continue to other countries so much, but I do believe that we are in a situation, taking the United States, for example, where many people believe that the stock market is quite frothy. And there is a discrepancy between the value of these stocks and what the price is. And I was watching CNBC this morning, and a very big leading Paul Tudor Jones said he expects 10, 15, 20% reduction in the stock market in 2025 and beyond. So, when that happens, people tend to turn towards precious metals. Will there be interest rate cuts in the United States this year? Yes. Will they happen at the next Fed meeting? Maybe not. But that also tends to support precious metals investment, including silver, because you have a place to put your money with respect to gold and silver. Now, on the silver side, it tends to follow gold. It always has. There's not a time, and there's been 2 or 3 times in our lifetime where you've seen silver react in a way. And you go back to the Hunt Brothers squeeze, you go back to 2011, and you go back to COVID. And silver outperformed gold in all 3 instances. So the thing is that when it comes to silver investment, it's volatile. I mean, it could go up real fast, it could plateau, and it could fall. But that's true with anything, correct? It's just, how do you make the argument that silver is a time-tested investment? Well, you don't, because it is a time-tested investment. And quite frankly, it's just about convincing enough people, institutions in particular, to get into the silver game.
And when you're talking with whether it's institutions, whether it's kind of the regular person on the street, do you feel there are certain misconceptions about silver and how it trades that come up again and again? A little bit early in the conversation, you had mentioned about, silver being shorted. Everybody loves a good story like the Hunt brothers. Is there any misconceptions out there about silver that you'd like to dispel?
Well, one thing I really don't like is when people call silver poor man's gold. Okay. So that to me is somewhat offensive to the silver players in the market in general. But quite frankly, there are a lot of developments that are impacting gold and silver prices, right? The gold prices are around $3,400 an ounce, silver roughly at 33. It's telling you something, okay? It's telling you that investors are showing concern about economic and political landscapes. I think the Fed's going to play a role in this down the road with respect to interest rate changes. There'll be other developments with respect to trends in employment, GDP growth, inflation, and of course, the strength of the US dollar. So, yeah, I think that all comes into play at the end of the day.
Well, I'd like to thank you for coming here. I have one more question for you before you go, but I appreciate you talking us through how silver stands on its own. This podcast series we're calling Gold for the 21st Century, but I'd like to ask you, what do you believe the role of silver should be in our financial system in the 21st century?
You have to look at silver's basic components, right? It's half and more than half industrial, and it's also a store of value, right? There are people who purchase silver because of its industrial side. There's people that do a combination of both, and there are people who purchase silver for a sole investment play. And as I mentioned earlier, silver has the opportunity to move percentage-wise in an upward arc that will blow gold away. And there are many people throughout the world that are proclaiming that silver has the potential to go much higher than it is today. So as an investor, getting in at $33, I think it's smart. When you look at the ratio between gold and silver, I think it's a smart play. And when you look at the fundamentals of the market, yet again, we're calling for the 5th consecutive year of a structural market deficit where demand outstrips current market supply. This is something that is not insignificant. These are things that are all leading to a base of a higher silver price down the road.
Thanks again to Michael DiRienzo, President and CEO at the Silver Institute. We hope you enjoyed the episode. We'll be back next week, returning to our series, How to Raise Your Agent. We hope you'll join us.
This episode is brought to you in part by Abaxx Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, battery materials, and precious metals markets. Smarter Markets are here. Contact sales at abaxx.exchange to get started. That concludes this week's episode of Smarter Markets by Abaxx. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abaxx Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.